My name is Daniel Wynn, and by day I invest in sports cards, but by night I make videos about investing in sports cards. I am the great curator. Join me on my journey to break even in the hobby that we all love.
Hello everyone, I'm the Great Curator and welcome to my channel. If this is the first time that you guys are visiting, thank you so much for stopping by. I really appreciate it. The reason I make these videos is for education. This is my fun and creative way to kind of give back to the community by sharing my opinions, my perspective, and my insight with you guys on these topics and issues that I'm discussing. It's my sincere hope that you guys will find value in these videos and continue to support this channel. This is also a way for me to kind of use the YouTube platform to spread my message of positivity and civility within the hobby. I believe that if we come together as a community and set a very high standard of conduct and civility that we hold each other accountable to, we will weed out all the bad actors that are currently trying to ruin our hobby, and we will be better off for it. We can be gentlemen investors, we can be lady investors, and we can do it very easily. All we have to do is just be kind, nice, respectful, and honest to each other. Super easy, guys. We should be doing these things anyways, but if we do it and we hold each other accountable to these standards, I believe that our community will be stronger, the hobby will grow, and the values of our cards will rise. So hopefully you guys will support this message. This is my mission statement. This is why I make these videos. Please support me. You can do that by subscribing, sharing, liking these videos, and hopefully you guys will enjoy. Thank you. Alright guys, today's video is going to be a review of Josh Luber's paper called Trading Cards Are Cool Again. If you guys don't know, Josh Luber, well, let me start at the beginning here. If you guys don't know who Josh Luber is, he is the Chief Visionary Officer for Fanatics, who's going to be basically the head person in charge of their trading card division. Okay, he used to be the founder and I guess president of StockX, which is like a very popular platform for selling sneakers, and now he's transitioned into sports cards. So he is a major player in the industry, a guy who holds a lot of influence, and you know, based on reading his paper and watching interviews that he does, he's brilliant. Okay. Anyways, he wrote a paper called Trading Cards Are Cool Again. This is like a legit research paper that he published online. It's free for everybody to read. It's like 53 pages long, but it details so many key parts of what the trading card industry is today. He talks about the history of trading cards, you know, throughout all the years and all the different peaks and lows of the trading card industry. He talks about what causes a market run up and what causes a market correction. He talks about what caused the crash this year. He talks about what he thinks the trading card industry is going to go in the future, where the market is right now, how healthy it is, just a bunch of stuff. It's a great read, and I highly recommend it to anybody, to all my viewers. If you guys are watching my videos, you guys are in the trading card community. You buy, you sell, you trade, you collect, you do all that stuff. Whether you call yourself a collector or investor, you need to read this paper. It's very insightful and will help you understand where the market is today. Okay, but if you haven't read it yet, I'm going to give you guys basically my takeaways from when I read that paper. I'm going to talk about 3 key takeaways here. Okay, number 1 is going to be understanding what causes a run up in the market. So that's like a boom where card prices just skyrocket. And then what leads to the eventual correction of the market, where prices come down to more reasonable levels. Okay, so that's the first thing I will talk about. Second thing I will talk about is going to be what caused the Q2 crash of this year, when the market went down, okay, and when it's been going down ever since. Okay, so that will help you guys understand what caused it and give you a little bit of perspective from that event. And then the third thing I'll talk about is, or the takeaways that I want to highlight here are his basic two events that happened this year that show the signs of the health of the market, okay, the health of the trading card market. So those will be the 3 things that I'll talk about today. This paper is so massive that I could actually talk about like 2 or 3 videos really about this, but this is going to be part 1. If you guys like this video and you comment and it gets like a certain number of likes, I will make part 2, and we'll talk about that towards the end. Okay, but anyways, let's get right into this here. Let's talk about what causes a market run up and the eventual correction. So the reason this is important for you guys to understand is you have to understand, like, when you see prices start to go high, and a lot of people jump in and a lot of people start trying to make money off of that, you have to be able to recognize what that is, okay, and what causes that. And then when it goes down, which it always eventually goes down. Nothing ever goes up forever. Everything always comes down in any type of investment market, okay, whether it's stocks, real estate, collectibles, art, whatever, right? So when you can understand why it comes down, that will give you perspective, okay? And I'll explain to you why it's important to have perspective and why, or what happens when you don't have the right perspective, okay? All right, so let's talk about this. So when the market goes up, it's usually because a lot of new people are coming into the market somehow, whether they're like big money investors, whether they're everyday investors like you and me, whatever it is, there's something that triggers an event where a lot of people come into the market. So with cards, from this paper that he was talking about, Josh Luber, he theorized that basically we all know that when the pandemic hit, a lot of people were stuck at home and they were revisiting their hobbies, which included trading cards. And that's when a lot of trading cards started to come, a lot of people started to get back into collecting trading cards. And then not only did, everyday people start collecting, but also very influential people started collecting. Celebrities, athletes, very wealthy people. And that caused more interest in the hobby, which caused a lot of new money to come in, a lot of big money to come in. Okay, which eventually got enough attention where institutional money, institutional investors like hedge funds, people like that, big companies started investing in cards. And when that happens, right, the people that have a lot of disposable income, the people that have a lot of money to spend, they go for the best cards available. So in this case, the example that Josh uses is that people went after the Michael Jordan 86 Flair PSA 10 rookie card. Okay. In my opinion, the most desirable basketball card there is out there right now, okay? So when people are coming in, like let's just say some famous person or some rich celebrity, right, with a lot of money, they come in, what is the card they're gonna buy? Are they gonna be buying base cards? No. Are they gonna be buying silver prisms? No. They're gonna be buying the top card, whatever they can afford, and in this case, it's the Michael Jordan card, all right? And when people come in, or when there's a lot of big money and a lot of people coming into the market and they go after the highest card, right, they will compete against each other. And that's what causes the market to go up, as all the people that have money are competing each other for the limited amount of cards. So when a huge demand comes into the market and the supply cannot meet that demand, then all the people start competing. And that causes the prices to go up, okay? And all these people that have money, they're buying. Everybody's competing with each other. The market goes up until the demand cannot support, or I should say the supply cannot support the demand anymore, right? But as new people start coming in and they're buying, and more cards become available, then the supply gets higher than the demand, and that's what causes the correction. Right? When there's less competition for buying because the supply has exceeded the demand, then there's less competition. So then that's when it becomes a buyer's market and you get better prices. When there's when there's more competition, low supply, it is a seller's market. Okay? The prices go high. But when there's more supply than demand, then it's a buyer's market, prices go low. That's called the correction, okay? And I'll use this example that he cited in his paper, the Michael Jordan Flair rookie card. So if you guys were paying attention to earlier this year, basically at the peak of the market, I think in February, 2 Michael Jordan PSA 10 rookie cards sold at Golden Auction, I think on the same day, for like $730,000 each. $730,000, guys. That's the highest price for a card at that time, for a basketball card. And the previous Michael Jordan rookie card, I think, sold for like $120,000. That was the previous high. And the year before that, it was sold for like 40 grand, right? So there was a huge run up to get it to $730,000, okay? And the reason that he theorized that it got up that high was that there was probably just a handful of investors who really wanted that card. Let's just say there were like 2 people he uses in his example. 2 people who really wanted that card. They had the disposable income to pay for it, and they were bidding up against each other, right? up until the point where both of them settled at $730,000 each. Okay, there may have been 5 people that wanted that card, but only 2 people were willing to pay that much for it, and then the 3 other people, let's just say, backed out. Okay, this is important to remember this example here. Okay, so the 2 people that bought those cards at that price, the reason they bought that card is he theorizes that people who spend that type of money on these cards are very sophisticated investors or collectors. And they believe that the card could be worth, let's just say, $1 million or more someday. But because it's so rare and it doesn't come onto the market that often, when it does, they do whatever they can to acquire that card. So even though the previous sale was $120,000, that does not mean that that is the actual value. They believe that it could be like $1 million card. So they're competing to get that card now because they don't know when the next time the card will show up on the market, and they're willing to overpay at that time because they want the card now, okay? Because of that. So that's what causes the run up. Now, this is very important to understand this. So once a card sets a record high, the top cards bring up all the small cards. So when that PSA 10 Flair Jordan rookie card went for that top level, all the other Jordan cards and all the other basketball cards and everything else went up with it, okay? The people who could not afford to pay $730,000 for a Jordan, maybe they could afford to pay, I don't know, $10,000 for a PSA 8 or something like that, right? So all the cards go up with that. That's the market. That's what causes the market run up. So when you're trying to look at the market and see where it is, pay attention to the big sales. The big sales of the cards will set the pace for all the cards below. Okay, so that's why we had a huge run up. That's why all those Jordan base cards from like his 2nd year, 3rd year, 4th year, that's why all those cards were going for a lot of money, because people were trying to get a piece of that. Okay, even though they couldn't get the PSA 10 Jordan, they were still trying to get a piece any other way they can, right? So that's what causes the run up. Now, this is what causes the correction. All right, so again, going to our example with the Jordan, right, where there's 2 people that can afford to pay $730,000. What happens to all the people below them that can't afford to pay that? They have their own price point of what they're willing to pay. That's why when we saw the next sale of the Jordan, I think it dropped down to like $530,000. Don't quote me on that, but I think it was a steep decline, like $200,000 decline from the previous sale price, right? And there's 2 ways you can look at it. You can look at it and say, well, the market changed and that card dropped $200,000. It lost $200,000 in value. You can look at it that way, but I think that's kind of an incorrect way to kind of view that. Instead, you have to understand that the buyer pool for a card like that is very, very limited. So the 2 people that were willing to pay up for it the previous time it went to market, they paid what their max amount was, which was $730,000. They got the card, okay? Then the next set of people that want that card, their price point is maybe $530,000. So that's what they're willing to pay. So when the market comes up, because there's less competition, the people who really want it, the one person that really wants it, they outbid everybody else, and that's $530,000. And then when that buyer is off the market, the next person steps up and they pay whatever they're willing to pay. So that explains why there's such a crazy fluctuation in the price for a high-end card like that. It's not necessarily the value of the card, it's the pool of buyers at that time who have money and are willing to pay whatever price they're willing to pay for it, okay? That's one way to look at it. Now, when that happens though, that causes the market to lose confidence, because if people are looking at that and they look at it through the lens of, oh my God, that card just lost $200,000 in value, they start to panic sell. And that's what we saw from February down until like August, right? We saw a lot of people selling cards and they were going for a lot less. That's one of the ways to look at it. That's not the reason that I want to highlight here, but I will talk about that later in the video, okay? But that's what you call the correction. Okay, and that's one way to kind of look at it from that perspective. Market goes up, okay, and as the pool of buyers decrease, less competition for the cards, and the price goes down. All right, So just remember that, guys. It's all about supply and demand. So once that Jordan sold, right? At that time, there were only 2 Jordans available, 2 PSA 10 Jordans, okay? It was a very low pop count. I think it's like a pop 130 or something, maybe 300 or something. I don't know what the pop count is. It's low for a PSA 10 Jordan, right? But at that time, there were only 2 available on the market. So that's why the 2 biggest buyers were competing against themselves, and they were willing to pay at that price. Now, when that record high was set, that caused an increase in supply of Jordan cards, because all the people that were holding on to the PSA 10 Jordans, they saw the record sales. And they thought to themselves, okay, this is my cost basis, which was probably super low, right, at the time. So let me cash in on that now. So let's just say you had a Jordan card and you paid $40,000 for it 2 years ago, and you just saw that it sold for $730,000. You're gonna cash in on that. And that's exactly what happened. The market flooded, not really flooded, but like there was like an exorbitant amount of supply. Like I think like 20 different PSA 10 Jordan cards came onto the market after that. That's documented through Golden, right? So when those 20 cards were on the market, what happens? All the people that wanted it before, now they have an excess supply. So again, remember, when supply exceeds demand, what happens? It's a buyer's market, prices go down. And that's exactly what happened. That's why the next sale, because there was less competition and more supply, the next sale went down to $530,000, and it fluctuated between that, and I think it's now at like $300,000 or something like that. So that's what happens. That's why it's very important to understand supply and demand dynamic and understand what causes a run-up. It all depends on the supply at the time versus the demand, and what causes the downturn, the crash, or the correction, whatever you want to call it, okay? So when demand is high, supply is low, that causes the market run up, all right? And when people see that and they have low cost basis on their cards, and then they put their cards onto the market when they were not there before, that makes the supply go up. When the supply goes up, there may be less demand to support that supply, and then prices go down. Okay, but that's what happened to the card market earlier this year, right? And as more supply went out to the market, right, because everything was being graded and everything was being returned, we saw the supply exceed the demand, and we saw the prices go down, 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 down. All right, that's the first point I want to go over. Second point I want to talk about is what caused this year's Q2 crash. This is what Josh Luber explains in his paper. If you're not familiar, Q2 stands for second quarter of the year, okay? Obviously, there was a crash from February down to like August, basically, is when prices just kept going down, 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 down. They're still going down for certain cards, but I think they've pretty much leveled off here, okay? And he basically has 2 theories about why he thinks that there was this steep decline, steep crash this year on cards, okay? The first thing that he talks about is what he calls his general theory. Why cards went down. And this kind of goes back to the first point that I was talking about in terms of supply and demand. So again, going back to the Jordan example, when all-time records are set, confidence is high, people have FOMO, they go into the market, they're buying, right? All-time records are set. People with low cost basis on their cards, people who were collectors or who had cards prior to 2020, they have cards that they probably have like just a few $100s in, and now those same cards are going for a few $1,000s. So then they flood the market so that they can cash in, all right? Which, who could blame them, right? So supply starts to grow, okay? And for a period of time, the demand is so hot that the demand can support the growing supply, right? They're right next to each other. But at some point, though, that supply starts going higher, and the demand was not there to support the excess supply. That's what caused prices to go down, all right? Just because people were flooding the market with their low cost basis cards, the people that were buying the cards and trying to flip them were making a smaller margin, and that margin became less and less and less. Therefore, less competition, the less buying that occurred, and that was one of the reasons that caused the market to go down. That's what he calls his general theory on this. The second thing he talks about is what he calls his special theory, okay? And this is more specific things that he thinks caused the market to go down. Number one is the reopening of the economy, which caused card shows to open back up. Back in 2020, when there were no card shows, nobody was doing anything, all the buying was concentrated on eBay or golden auctions, right? All the competition, all the eyes was focused on those two platforms, and there was a lot of competition, so which caused the prices to go up. Now, when the economy or the country started to reopen back in February, March, that's when the card shows came back. And when the card shows came back, a large percentage of people got off of the eBay platform and started doing transactions at card shows for a number of reasons. Number one, they could negotiate the deals, so it would be, they could get better deals. Number two, they wouldn't have to pay tax on eBay. Number three, they could pay in cash, so they could get better deals. And people were selling in cash so that they wouldn't have to report the sales. So a lot of transactions were happening at card shows, at card shops and things like that. But basically, things were happening off eBay. When things were happening off eBay, that causes less competition. And when there's less competition, the price goes down. And the problem, and I've talked about this before, is that a large percentage of the hobby, an overwhelming percentage of the hobby, relies on eBay. And the problem with that is when the majority of the community relies on eBay as the one source of truth for the market value of cards, then prices are always going to fall. That's just what's going to happen. Unless all the buying is reconcentrated on eBay exclusively, then prices will always fall, because it's just that there's other transactions that are happening in different places that are not recorded. Right? And those transactions are happening based off of what's happening on eBay. But eBay, is not getting the benefit of having that data recorded on there. So when people look at it, they see less competition on eBay and things like that, and prices are always going to fluctuate and be volatile because of that. Okay, guys? So just remember that. eBay is not the only source for value, okay guys? If you take anything away from this video, this is what I've been preaching for months. eBay is not the only source of true market value. You have to take into consideration what's happening in other places and the overall card market, okay? But that's the first part of his special theory. Second part is that a lot of people in the market were exposed to different types of markets. So, people who were investing in cards, they were, suddenly, exposed to other things like cryptocurrency and NFTs. And that took people's attention away from the card market, especially when things were going down. They jumped to other markets where those other markets were experiencing a boom and going up too. This happened a lot with cryptocurrency. This happened a lot with NFTs. And when people were leaving the card market to go to these other ones, they were taking their money with them. They were taking their money, their buying power, and of course that affected competition, affected demand, and caused prices to further go down. And then the third point he talks about in his special theory is that PSA and BGS, they shut down their grading services, effectively shut down all their grading services, which cut off the ripping wax, grading, and flipping strategy. That was a huge part of what made the market go up, because people were ripping boxes like crazy. They were sending cards in to get graded. They were getting the cards back in a relatively quick turnaround time, and then they were flipping it. So they get a card for they were like $5 into a card. They get it graded for $10, $15, whatever. Then they go and sell it for like $100, right? Make a huge margin on it, and then they would reinvest that money into the market. And that kept the market going, because people just kept buying, grading, flipping, and repeating that process. And when PSA and BGS shut down that service, that effectively shut down that entire chunk of the market. Okay, people were not buying as much wax to rip. People were not grading anything, and people were finding it very difficult to flip, because suddenly they didn't have the low cost basis and large margins that they were working with before. Instead, they were buying cards that they had they were buying cards that were already graded and trying to flip them and make 20-30% when they were used to making like 50 to like 100 or 200% on the cards, okay? So that really affected people's psychology and affected their strategy, and people had to kind of pivot to a different type of strategy. And a lot of people were not savvy enough or in the position to pivot to different strategies, and that's when you saw a lot of panic selling. Okay, so those three things are what he summarizes as his special theory on what caused the Q2 crash. Okay, guys. Okay, so now let's move to the third point, which is going to be the signs that give confidence to the health of the market today. And Josh points in his paper two distinct events that happen. Okay, number one is eBay's record sales. So in Q1, when prices were going up, eBay recorded a record sale for cards, sports cards only, or trading cards only, of $871 million. This was the highest quarter they had ever had in the trading card market, $871 million, and that would go along in line with the narrative that the market was booming at that time. So you would think that when the card market went down in Q2, that eBay sales would also go down, right? That was not the case. eBay recorded in Q2 $1.13 billion in sales. So even though the overall card market and their values were going down, sales were still very high. So that kind of shows that the community, the consumer confidence in the market itself, people are still buying. Whether they're trying to lower their cost basis on their cards by buying more cards, whether they're trying to buy in the dip, whatever it is, people have not stopped buying, which is a great sign. Okay. The second point that he points out as a groundbreaking event of the year was the national convention. So the national convention happened in like July of this year. I was there, and according to reports, I guess the record attendance there was like 4 or 5 times as much as they've ever had at any other year, or at least the prior year of 2019 when it was open. 2020, they didn't have a convention because everything was shut down. So 2021, there was a lot of built up demand. There were a lot of new people in the hobby. So people just descended on Chicago as like the event of the year, and that's why the attendance was so high. So record-breaking attendance for the National, which shows a lot of interest in the hobby. Also, I guess somehow they kept track of this statistic, but apparently 46% of the attendees there were 25 years or younger. 25 years old or younger, which is a great sign for the hobby. Any hobby has to have young blood in it. It has to have young people who are excited, who will bring innovation, who will do things such as create content, support shows, buy product, things like that. Any hobby, any industry needs youth, needs young people to support it, okay? If they don't, it's just gonna die off. A comparison I would use would be like if you go to a card show, look at the demographic at the card show, and then go to like a coin show. Guys, go look at a coin show and see what the demographic is like there. It's a bunch of old people, and it's a bit depressing. It's not cool. It's not fun. If you really love coins, then you'll have a great time. But if you're just going there, you're not going to be excited. If you're a casual collector, you're not going to be excited. It just doesn't have the same type of energy, same type of excitement as like a card show, guys. So the fact that we have a lot of young people in the hobby, this is great news. One of the reasons he cites that the hobby died in the late 90s is because people were old. A lot of like the young people, they were leaving the hobby to go do different things, and there was just a bunch of old dudes in the hobby the last 20 years or so, and that's what caused a lot of caused the hobby to kind of almost die off, essentially. So it's great news that a lot of young people are jumping into the hobby and bringing a lot of energy with that, okay? These are great signs that he points out in his paper to show where the hobby is right now. He believes that the hobby is very healthy based on these signs, and that it has a lot more room to grow based on that potential. Okay, guys, so that's basically it. The last part that he kind of talks about in his paper is where he thinks the hobby is going to go. I will save that for part 2 of this video. If we do that, if I get like 1,000 views on this and a bunch of comments where people are interacting with each other, then I will make part 2 of the video. But yeah, that's just too, I don't want to go too long into the video. So that's a whole different video in itself about where the market is going. So if you guys want to see that video, let me know in the comments below. But that's basically the key takeaways from Josh Luber's paper that I wanted to highlight in this video. So I'll just go over it again. In summary, the paper talks about understanding what causes a price run up and what causes a market correction. Basically, you have to understand the supply-demand dynamics, okay? When there's a huge amount of demand based on a lot of new people coming into the hobby and the supply cannot meet that demand, prices go up. When the demand starts to get dwarfed by the incoming supply, then the prices go down, and that's what they call the correction, okay? It's not necessarily a crash. It's more of a correction depending on the other factors involved. The second thing that we talked about, the key takeaway from the paper is understanding why the market crashed in Q2 of this year. Basically, there's two theories behind that. The general theory is that people with low cost basis in their cards flooded the market to cash in on the card values, and as the supply rose, the demand could not keep up with the supply, therefore less competition, and then prices went down. The second part of that is the special theory of why he thinks the market went down in Q2. That being that card shows opened up. There were transactions that were happening off of eBay. Because so many transactions were happening off of eBay, there was less competition and the prices were going down. As people as people continued to use eBay as the source of truth for the market value, they looked at the declining prices and they lost confidence, and prices went down because of that. Okay. Second part of that is that a lot of the people shifted their money into different type of investment markets, such as NFTs and cryptocurrency. So they took that market out of the card market, they put it somewhere else. That's less money that's going around, less buying, selling, trading going on. That affected the overall market. And then third is PSA and BGS shut down their grading services, which shut down a huge part of the market in terms of people who were ripping wax, grading, and flipping those cards. They had to pivot or shift to a different strategy, and a lot of people could not handle that. Okay, so and then third part is signs of where the market is and the health, the overall health of the market, which is, in his opinion, very good. That being that eBay recorded record sales in Q1, and despite a decline in card values, they recorded record sales in Q2 of this year. Also, the national convention had record groundbreaking attendance, and the majority of the attendees were young, age 25 or younger, which is a great sign for the future of the hobby, where a lot of young people are in it that can bring excitement and energy and innovation. Okay guys, so that's basically it. I know I went pretty long with this video, so hopefully you guys stayed or were able to get some of these key takeaways. Again, I would highly suggest that you guys read this paper. I will link it down below for you guys. It's super interesting, and it gives you a lot of insight on understanding what this is about. If you're just in this as a collector and you collect for fun, you don't care about this stuff, fine, whatever. Don't read it. But if you care about the values of your cards, which let's be honest, everybody cares about the values of their cards, right? The value is what makes it interesting and what makes it fun. Then you need to read this paper so that you can understand it, and then you can continue to have this discussion with your peers and things like that. Okay. If you guys have read this paper, please let me know what your key takeaways are in the comments below. Let's interact with each other. I would be interested to hear what you guys think about this. This is just my takeaways. These are the things that kind of stood out to me about his paper, but there's so many little nuggets of knowledge in there that honestly, I probably missed a whole bunch of things. Okay, guys? So let me know what you guys think about that. I appreciate it. If you found value in this video, please like, subscribe, share. I appreciate it. Thank you. I will see you in the next video.
I'm the great curator, the ultimate gentleman investor. Yeah, the great curator, always stay